Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, September the 5th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. I do not do this as a commercial venture. Do this live each day in the go-to in the pre-market session. Then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's start with news. We had Brainerd speaking this morning. I don't know if he's still speaking, but he is speaking. Of course, yesterday was Labor Day, a holiday, so we're going to be looking at Friday mostly, but I do not purge my holiday sessions. If we trade, I look at it, so I do include the Monday partial holiday session in my analysis. 10 o'clock, we've got factory orders month over month. We've got IBD, tip economic optimism. Then 1:10, we have Kashkari speaking. And then tonight we have Kaplan speaking. In terms of news this week, most important thing, it is rollover week. So we will be rolling over, this Thursday. Tomorrow we've got Canadian trade balance, U.S. trade balance, final services PMI, Bank of Canada rate. This will be interesting to see what Canada does in terms to whether or not we get a rate increase out of the Fed on next Wednesday, I believe it is. ISM non-manufacturing PMI, beige book tomorrow. Then on Thursday, we've got Draghi speaking at 8:30. We've got unemployment claims. We've got revised non-farm productivity. We've got crude inventory. So we still have a fair amount of news this week coming out on Friday. Employment change for Canada, unemployment rate. Harker speaking, U.S. final wholesale inventories, and consumer credit. I'm not sure why there is no University of Michigan consumer sentiment and inflation expectation, but there's your news for you. In terms of looking at the COT report, I always like to look at it on Mondays. Nothing's really changed. We're seeing that commercial is getting more net negative, as is small spec, but large spec continues to show net positive, an increase. In fact, the highest I've seen it for quite some time. So I think we're going to see a battle. You can see that the commercial, the darker color, is getting much more net negative as they change their position from net long to net short. And small spec, retail is following suit, which is unusual, because usually you'll see the large spec and commercial flip before you'll see the small spec. Maybe the small investors are getting smarter. I don't know. Each day I like to start my day with a basic candlestick chart. Use a 9 EMA, 20 SMA. I'm looking for slope and separation, where we are within the different time frames in terms of trend. Do we have got good slope and separation? Is price paralleling the 9 nicely, or are we coming down and challenging the 9 and the trend, or violating by breaking the 20? And you can see that this is still very strong. Our month open is 24.70 and a quarter. So just slightly higher from last month, but this we had 5 months in a row. We haven't had 5 months, positive months in a row since going back to 2014. So this trend is very much strong. Right now we're still inside of the prior month, but it's still very early. Going to the weekly, you can see that we had the inside bar we talked about on the Monday of this week. We were looking for a move down to test the 9 EMA. They took it all the way down to the 20 SMA and did not violate the trend, bounced last week, and now we've got possible continuation. Keep an eye on the 24.51.75. That's going to be a crucial number for us to hold now as we look at continuation to the upside. In terms of the daily, this daily includes the holiday session, our week open at 24.61 1/4, and we are above the 9 and the 20, so we are basically, we've got a little bit of a head and shoulder pattern going here, inverse head and shoulder. So let's just take a quick look at this. So I put the neckline right about there. You've got the left shoulder there, the head right there, right shoulder there. And in terms of possible breakout, we get the primary target up at 25.11, and again, this is on a daily, but this will remain valid until we break below the 24.21, and our key line in the sand, of course, is below us at the 24.14.75. So just note that this is a continuation pattern, and looking for this trend to continue on the way up. Oh, come on. So we are still positive on the daily. Going to the intraday, you can see that on the news, I mean, North Korea did a test of a nuclear bomb over the weekend, and that is what gave us the gap down on Sunday night. And since then, we've been paralleling. We've been riding this 20 SMA back up towards this gap fill. The low from Friday is 24.73.50, and we've gotten as high as 24.70.75, and we seem to be going sideways. But the overall trend is still intact, even with this gap down. And this is a revaluation of a news event with the North Korean atomic explosion. Going to the 4-hour, you can see again we gapped down. We got back above the 9 and 20. Left a naked cross, came down here and filled it. There is a naked cross right here at 24.74, so mark that down as a cross to watch. There are going to be a few of them with this gap down, but right now we're just going sideways and holding the 9 and the 20 right now. Going to the 30-minute, you can see same thing, gap down, naked cross above at 24.76.50. I'm writing these down as I go as well, but basically sideways consolidation. Possible, no, would have been too big of a retrace. I was thinking possible inverted cup and handle, but the retrace was way beyond the 65%. Going to the 15-minute, again, you can see that we're holding the 9 and the 20 overall. And again, same thing, gap down, left naked cross above. This one's not so naked, so I'm not even going to bother with that one. But basically, we're slowly working our way up to fill that gap zone. And then going to the 5-minute, you can see that we do have a break below the 9 and the 20, and we've got a possible cup and handle here. Let's just quickly draw this. There's the rims. Let's see if we got a big enough retracement. We did. We came back in. Let's see what the expansion looks like. And again, on a pattern like this, you want to wait for the break. You don't want to try to front run this because this can get violated very easily. 24.7350 is our cup and handle measure move. Just writing it down in my journal as well. So as you can see, overall, the the macro to the micro, we're basically still in an upward trend, even with this this gap down overnight. If we take a look at the big picture, you can see here we are right back smack dab right in the middle of this distribution zone, this microcomposite, where the VPOC, the microcomposite VPOC, 24.69, we're trading 24.6850. The key line to pay attention to today is going to be that 25. That's your over underline. Your key line in the sand is going to be 60, and then above 75 is what we're going to be watching for the upside. And you can see that the value areas, okay, this 3-day value area is almost right in line with the longer time frame microcomposite value area. So this value area high is 75. Same with this one right here. This value area low is just slightly lower than the other longer time frame value area. This is 64.50. This one's 65. And basically, you can see that the VPOCs are on top of each other. So we're either seeing sellers step in here and holding us at this 69, or we're accepting this 69. So 69 is going to become a very pivotal point today on whether or not we stay above it or below it. If we're below it, the sellers are really holding us down. If we can get above it, then the buyers are accepting this price and looking for continuation to come up and challenge and go into price discovery above the 75. Anything below the 60, then we're likely going to get a bigger retrace and come down towards this prior value area down here. Down starts at 49, and the microcomposite is here at 43. A lot of repair work to be done here, but there is some repair work still above us. So if we take a look at Friday, see, we basically had a sideways day on Friday. We opened auction out of range. We came in. We did not check the value area. We did not get into the value area. And we basically just went sideways, accepting value higher. And we put in a VPOC at 75.25, which is above the prior day range. Then, of course, on the news of the nuclear blast, we did gap down quite a ways. We opened at 65.75, where we closed on Friday at 74. So basically almost a 10-point gap. Came down, and then we came up to Thursday's VPOC, and they failed there twice so far to get back above that. And we're currently trading right inside that longer time frame microcomposite VPOC, and our Monday holiday session VPOC is at 67.75. So let's take a look at overnight inventory. Overnight inventory is pretty balanced. I'd say it's basically about 60 to 70% net positive. We did open up at 68 and a quarter. We've come down to 65 and a quarter twice, putting in a week low in the overnight, but we also have a week high at the 70.75. We've come up here 3 times. So really undecided here as we chop around in this longer time frame balance. Overnight VPOC is at 69.50. So let's start moving our numbers over. Our overnight VPOC is 69.50. I expect that to be taken out fairly early. Our overnight low is 70 and 75. Sorry, overnight high 70.75. That is a week high. We also have a week low down at 65 and a quarter. There is an LVN right here at 67. It's just below the naked VPOC from Monday session, but that's about all that this is going to give us in terms of information. So start looking at our numbers. I've got to expand this out so we can see both Friday. Of course, this 69 is going to be our pivot point, not a floor pivot. It's going to be a pivot point in terms of looking long or short. Whoops. What is going on? Sometimes, there we go. I'm just going to call it my pivot. And MC VPOC. And then we've got this area right here, which is going to be the 73. Our target above right now is going to be the 75. Below the pivot, our target is going to be the 67.75. And then we've got this value area low down at the 66.75. Anything below that, I'm looking for a takeout of the overnight low. The 65 to 64.50. This is going to be our over-under line. Anything above it, I'm still looking to the long side as an overall macro view. This is our MC value area lows between those 2 microcomposite VPOCs. And then below that, we're targeting the 62.50. But the key line in the sand now is moved up to the 60 area. And below that, we're looking at the 56.75. You can target, the first target is really going to be 57.50. Now, our 20-period daily ATR is running at 19.59, so off of the overnight high of 70.75. Our downside daily ATR target is all the way down at 51. $51 and a quarter to be exact. And off of the low overnight of 65 and a quarter, Our upside daily ATR is up at 85. So pretty large capability in range for the day. I know I'm taking a long time to do this, gang. So in terms of, so those are our downside numbers. You know, we have a 43 target, but I don't think we're going to get there. Taking a look, I gotta quickly take a look at the bigger picture here to get some of these lower numbers in here. 54.75. Come on. 54.75. 51.25, and then we've got the value area high at 48.75 from the micro composite. And then the next big target below is 43. All right, so that's our downside numbers. Taking a look at our upside numbers. Whoa. Sorry. I didn't know where my numbers were. So above the 73, we've got the naked close at 74, the naked VPOC just inside of the value area. Going to put a trade level right here at the LVN at 77, targeting the 78. Usually it'd be the other way around, but the way this is setting up. And then the key line in the sand above is going to be that the old all-time high at 80.50. The over under the the warning line is going to be that 75, which is the value, the microcomposite value area high. I'm going to put that in there so we can see that, because that's basically a breakout. Man, a lot of stuff to go through. All right, so those are the levels. Didn't take us very long to get that done. So let's take a look at what our hypothesis. Right now, the hypothesis has got to remain long. We're back up in this upper distribution until we get below the 60. I'm thinking that this is still a trend up. So my main hypothesis is not going to change. It's going to be an open auction just inside of the holiday session, outside of the Friday session. I'm looking for responsive selling down into the 67 to 65, finding buyers, and then rotating us back up and filling this gap and coming up into the 74, 75. That's my main hypothesis. My secondary hypothesis is going to be an open auction just inside of the holiday session, failure to close the gap, and then a move down and a rotation down into the 65 to 64, chop around here, and then push down into this 60 and come down and test the lower side of this distribution. Remember, we still have this gap zone right here between the 62 and the 60.25 with the naked close, the actual gap closed down at 56. So I'd be looking for hypo 2 to come down into this area with a late day probe. Hypo 3 is going to be a open test drive failure to get back to the mid, possibly even leave the naked V puck, but I doubt that it's going to be left. And then I'm looking for initiative buyers to step in, push us up very quickly into the 72 area, chop this low on Friday, and then push up into 75 and continue the trend up, pushing up towards the high side of the Friday distribution and up towards that 80-50. That is hypo 2. And then hypo 3 is basically sideways consolidation inside of this gap zone. So basically chopping between 65 and 75 and basically spending most of the day between 69 and 73 in this gap zone and just going sideways. And then hypo 4, or hypo, the alternative hypo is a failure day, and basically fail to fill the gap, come down and fill the gap down here, down to 56 and push down through to the 51 to 48. We have range capabilities to go down there. So, we have to have that as part of our plan. I know that's a lot of information, and I've rattled on, but it's Monday from a holiday session, so there's a lot to talk about and look at. But that's going to complete our pre-market session for the ES. Just take a quick look at gold. Gold is broken out and is now creating a balance zone above. The balance is here at 1341. We didn't quite get to the 50 that I was looking at. I was looking for a $25, $15 to $25 pullback, and then a move towards the 1350. We got to 1345.50. We've come back down off of that. Key level to watch today is going to be this 1330 below and 1337 above 37. I'm looking for a move back up into the 41 to 44. Below, if we don't hold and bounce off of the 1330, I'm looking for them to come down to the 23-24 area and test the value area that we just broke out of on Friday. So that's what I'm looking at. Gold. I still think gold is going to test this 1350 area. Backfilling right now. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.